JB Chemicals joining in. JB Chemicals, in fact, posted what was a decent set of Q4 numbers. We had the margins which were largely in line with estimates. We had the profit which missed estimates a tad bit. So we do have Mr. Nikhil Chopra, who's joining in from JB Chemicals. He's joining in. He's the CEO and the whole-time director to discuss the quarter gone by. Mr. Chopra, hi. Thank you very much for taking the time out. I wanted to first start by talking about the domestic formulations business. As a whole, it was up around 29% on a year-on-year basis. But there were some concerns that the organic segment of the business, which is not your acquired brands, that was a bit soft this quarter. It was versus what we've seen at least in the 9 months and on an average in terms of growth. What led to the softness? Was there any kind of impact on account of the NLEM price revision? What can you guide on going forward?
So good afternoon, Ekta, and thank you for having me on the show. If you look at overall our domestic performance, if you look at externally, the way we are reflected, we continue to be the fastest growing company for last 2 consecutive years. We have been growing at a handsome pace of 20% as compared to market growth of 9%. Quarter 4 was a soft quarter in terms of the portfolio that we have got. But overall, if you look at the way we have performed, both in organic and inorganic, organic business also has grown at high teens for the year. So overall, from a guidance perspective, we will continue to deliver a growth which is 300-400 basis better than the market. And we expect Indian pharma market to grow at around 8 to 12%. So we'll be mid-teens or higher than, close to mid-teens probably, or higher than mid-teens in the coming time. That is what I can say. But I don't think there was any impact of NLEM. And overall, I think our agenda in terms of what we want to do in our organic portfolio, focusing more on the chronic part of the business, continues to be there. Our chronic part of the business, which is contributing today 55%, grew at high mid-teens, which gives us more confidence in terms of what agenda we want to drive.
So, Nikhil, you're saying that in FY24, you're looking to grow at either mid-teens or higher mid-teens. That's good to hear. I also wanted to understand this acquired portfolio that you have, right? You've acquired Sanzyme, which is in the probiotic space. You've acquired a heart drug from Novartis, the pediatric brands as well. What kind of growth have you seen, or rather, what kind of growth are you looking forward to from the acquired portfolio in the year to come?
So, Sonia, the commitment that we have with the board when we do any acquisition, the payback period should be close to 6 years. But internally, we have taken aspiration that the payback period should be between 5 to 5.5 years. And happy to share that our inorganic portfolio, whatever you shared in terms of probiotic, heart failure pill, and now we have acquired this portfolio of Razel rosuvastatin. We are looking at this portfolio should continue to grow at around 20% plus. That is what, and we see huge scope in terms of, if I have to talk of probiotic, when we acquired the business, our market share was 7.5%. Today, for probiotic business, our market share is close to 10%. Razel portfolio, last 3-4 years, the portfolio has been, it has seen muted growth. But in coming 2 years, we are looking at, we should grow at double digit in the entire portfolio of rosuvastatin. We are the 10th ranked company in rosuvastatin portfolio. So there is a huge scope in terms of how we can climb the ladder.
Okay. Mr. Chopra, your gross margins, that was the positive. It improved on a Q1Q basis. It was almost 64% this quarter. But it didn't really translate down to your EBITDA margins, which are still in that range of around, say, 20 to 21.5%. Why is that, and what can you guide us on?
So if you look at the guidance that we've been giving for EBITDA margins is ranging between 24 to 26%. And if you look at annually, our operating EBITDA margin is 24.3%. The guidance of 24 to 26%, we are revising that guidance between 25 to 27% because we see that the portfolio that we want to sell should have a better mix. And equally, the heart failure pill that we were selling, there also we will see margin expansion happening in coming 2 years.
So this is going to be in FY24 going forward. Now we can expect a range.
FY24-25.
Okay. So what is going to sustain probably as a steady state margin picture for the company?
So overall, the efficiency drive that we are having in the company, per person productivity in India field force. Today, our We started the journey with 3.7 lakh rupees per person productivity. We have 2,000 plus medical rep. Last year, the per person productivity was 5.4 lakh. This year, we have ended the per person productivity of 6.2 lakh. Now, this productivity, we want to take it to 7 lakh rupees. And more so, chronic share improving, better product mix. That is what we are trying to drive in India business. And equally, not forgetting what we have done in the world of CDMO business, where our margins are better. And that business is also has given us a good EBITDA margin, as well as overall the volumes that we have seen this year. If you are able to grow double digit on those volumes, I think it should help us in terms of what guidance we are giving for our EBITDA margins, 25 to 27%.
Okay, all right. You also have some cash on your books, Nikhil, about 300 crores. Are you looking at any more acquisitions? And if yes, what are the areas that you're scouting for?
So this is ongoing discussions that we have been having every time. We continue to evaluate assets. That is what I can say at this moment of time. More so desired, we would like to do acquisitions in the world of cardiometabolic, in the field of nephrology, in the field of antibiotics, if there are portfolio available. We generally, when we look at any acquisition, we look at if we have the capability of growing that asset better than the way it is positioned today. That is what we keep in mind. And we want to look at how we can build a lot of synergies, what we have done with all our 4 portfolios that we have acquired. So that is a theme that we keep in mind. And we also don't want to chase mad valuations. More so, we are the company who have invested close to $200 million in last 1.5 years in terms of doing acquisitions. And all 4 assets has supposedly done better for us.
Okay. Just quickly, before we let you go, Nikhil, what would your larger picture guidance be? Because Rantac, Metrogyl, Nicardia, all of them have gained in terms of ranks. Your lozenges business is doing well. Any plans to probably diversify or maybe focus a little more on regulated markets such as the US?
US, Ekta, we have a very small business of around $30 million. We have 15 ANDAs. It is a cost plus model. We have been filing 1 to 2 ANDAs every year. You should see us. You should see us filing 4 to 5 ANDAs every year, going from. And last year we filed 4 ANDAs. So that $30 million business will go to $50 million in 3-4 years from here. But what I would like to talk about, what we are trying to do in ROW market, where we are taking a big bet. There, unfortunately, up till now, we have not launched new products. But with the BE filings and the regulatory work that we have done, more so in progressive portfolio, for products like in heart failure, gliptins, flozins, all those products, you should see us launching around a dozen products in ROW market, which is a combination of Sub-Saharan Africa, Latin America, Southeast Asia, and Middle East. That is what we are trying to do. That is how we are looking at how do we expand our footprints there.
Okay, all right. We leave it at that. Thanks a lot for joining in and speaking about the business as well as the way forward. That's the word coming in from JB Chemicals. Let's do one thing. Let's slip into a quick break. We'll get you more on the market.